The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host.
The following takes place between 2 p.m. and 3 p.m.
Well, certainly all the things can change in the stock market in the New York second, and they do. So kind of a mixed message in the market today. We certainly have a list of stocks I've been posting every once in a while in the Tiger's Den. 100 or so here that are really moving one way or the other on earnings. And of course, after the bell tonight, we get into Amazon, Intel, Lam Research, Electronic Arts, Western Digital, Chipotle Mexican Restaurants, Expedia. After the bell, Cypress Semiconductor for Solar, Amgen, Decker's Brand, Juniper Networks, Edwards Life Sciences, Discover Financial Service, Aflac, Yamana Gold, VeriSign, Digital Realty Trust, Beazer Homes, Ellie Mae, and AU Optronics. So a lot. Then, of course, tomorrow morning, yet another round with Twitter. ExxonMobil, BV, Chevron, Merck, Phillips 66, Colgate, Palmolive, Cabot Oil and Gas, Weyerhaeuser, Iron Mountain, Virtue Financial, Capital Product Managers, and Embraer, which is the Brazilian aircraft maker, who always is rumored to be being bought out by Boeing, but we haven't heard much of that. So yesterday we went back up to where I was looking for resistance. We've been talking about that 28.45 level. So we got there yesterday. We're off 8 points today, and a lot of people said it was impossible, and President Trump did, I guess, do the impossible then, and that is get the unelected head of the EU, Mr. Junkers, to at least capitulate a little bit. And of course, the ultimate goal is no tariffs whatsoever from country to country. We've allowed one by one for countries around the world to tariff our products while doing nothing in return. Some of this is that you just didn't want to make waves. Part of it is at least some people think America is evil and deserves all the punishment it gets. I've seen far too many of those people squawking in the last 24 hours. I don't understand. America's a pretty good place. It's just, that's one of the things where you get to, I just don't understand. Why do you hate America so much? But man, there seem to be a lot of people that do. And I don't know if they really hate him or they just think if they whine enough, things will change to the way they want. But yeah, you had to say it. The EU caved yesterday, at least somewhat. Now, with us together, the plan is for the EU and the United States to get together and start beating up on the Chinese who are stealing all our intellectual property. What would life be like for the United States with a fair and level playing field between all countries in the world? And, there's a few things that you need for strategic security for your country. But that doesn't explain, Germany and others putting a 20% tariff on our cars over there. Doesn't explain a 25% tariff for our cars in China. And I guess it's going to take a little while for everybody to get used to the fact that we aren't just sitting back anymore, no leading from behind. We're going to aggressively pursue capitalist markets around the world, and probably a pretty good thing. We'll put more people to work here in the United States, unless you think that's somehow evil, which you can call in and tell me why. I just don't understand it. But a lot of people, I guess maybe they just don't like change. I think there are a lot of people that don't like change. I don't think I'm the guy that sits out on the lawn shaking my fist at the sky, saying why everything is going to hell in a handbasket. And the evidence just doesn't seem to go along with it so far. Markets don't always follow what's going on in the zeitgeist of what everybody in the stock market is looking for. Good markets can hide problems in the larger economy and the get-go. So markets do go higher or lower. But the idea that you can link the two all the time, I think, is a little tough, especially when the news continues to just roll in and be fairly good. Now, tomorrow we're going to get GDP numbers. On the low end of what everybody's looking for is 3.5%. 2 years ago, they would have killed for 3.5%. They would have killed your mother for 3.5%. On the extreme high side is 5%. I think the market could also freak out if we got 5%. A lot of people are saying it's 5% would be unsustainable, and you just don't want to get that good of a mark because it will only be down there, downhill from there. But again, it seems like people just, man, they're sticking with the idea that everything's going to hell in a handbasket. I will change my opinion. I'm not married to it, but it seems like the last 145 points higher, I've found a lot of people that are married to the end of the world scenario. The end is nigh. I want to see him out there in Times Square with a little sign squawking at anybody that walks by them on the little center thing with the grass. But you know what? It's hard to say. Anyway, I think GDP numbers are going to be good. I just sent out a long list of stocks that could have biblical-sized short squeezes into tomorrow if the numbers are good. We'll look and see whether or not there's an opportunity. But the little Easter egg at that I put up before the show says the early bird may get the worm, but the second mouse gets the cheese. I am going to be sitting on my hands as long as I can, but guess what? Fun buying starts tomorrow. If the numbers are good, the markup period will continue. Now, I guess we could talk about Facebook all day long. Let's get a little bit of news or news out of the way, or history out of the way, and then I'm going to get into why you have to kind of watch about ETFs today. And a lot of people I don't see talking about it, but we will get to the bottom of it and tell you the rest of the story.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, posted all the earnings coming out tonight in the den here. So we got a lot to look at. This is where you can easily get overloaded. So let's take a minute, reflect on history.
And it's all just a little bit of history repeating.
On this day in 1990, founded in 1975 by Bill Gates and Paul Allen, with $3,000 earned from writing a version of basic programming language for the Altair, which I had, 8080. While studying pre-law at Harvard, Bill saw an article for Altair in the Popular Mechanics magazine and called the company to find out if they could use a programming language for their computer. They were interested. Bill wrote half the code using Harvard computers. After flying to New Mexico to deliver the software, he picked up a check for the company, but he held onto the copyrights for his work. On July 25th, 1990, Microsoft broke the $1 billion mark in revenue, the first software company to do so. And of course, last time I looked today, they were printing around 110, even though everybody was a bit antsy out here. 109.83 is the last tick on that. And again, there's about 100 stocks that you can look at out right now that are in play because of earnings. My take, I had a lot of people email me on this already. Of course, you can always email me at path@tfnn.com. I don't have a lot new to say about this. Anybody that's read the Tech Insider, anybody that's listened to the show knows that I thought that Facebook, which I call fake book sometimes, has always been kind of a horrible product, kind of like cigarettes, alcohol, drugs of any kind. Yeah, can use them. Yeah, do some people become horrible addicts? I think the answer is yes. And for me, Facebook has always been one of these things where kind of like giving a bottle of Jack Daniels and the car keys to the 16-year-old boy. Not a very smart idea. It's allowed everybody to become horrible narcissists. The people that run it, especially Zuckerberg himself, I thought it was kind of funny today because I heard many reports talking about owners of the shares of the stock trying to run him out. And I guess they missed that part at the IPO where he basically built a wall. And there's literally, if he goes to jail for murder, he can run and be the CEO from the company in jail. There is nothing you can do to get rid of Mark Zuckerberg. Two, he's in the last 4 or 5 years drifted to a belief in socialism. And I don't know how you can be a capitalist and be a socialist at the same time. Of course, 2001, the robot started killing all the people because it couldn't figure out the difference between its two prime directives, the ability to carry out the mission and take care of the people. Well, it decided the mission was more important and killed off all the astronauts, save one. And of course, we all know how that ended up. Daisy. But for me, it's always been a horrible company. In the last 4 or 5 years, they've all decided that being out in the area that they're at, they're all reinforcing their ideas. When they talk about diversity, that's probably the least things that these guys have in social media. They reinforce their beliefs to a point where they've ticked off half of the country, or at least half of what the country believes. A lot of people are willing to look the other way, but it's not just them. We've got Twitter. These guys, all you got to go is just do a little Google search to see how Joseph Goebbels, these guys have gone on free speech. You don't start a public company to go around and trash the thing. And it seems to me like there is kind of somebody believes there's a higher calling right now to trash their companies in the idea of some kind of virtue signaling. I would say, as I said before, I stayed away from Facebook. I wouldn't buy it. I wouldn't touch it. There's got to be some kind of reality back to these companies. And it just doesn't seem to exist yet. It may happen. But at this moment, I want companies that actually are kind of responsive to at least some investors. I know I can't move Facebook, but you know what? These guys got to figure out that they have to live in a world that is capitalist, and they can't go willy-nilly running around ticking off half the country at will. But anyway, that's my 2 cents on Facebook. Yes, a question. And then I built an Altair 8080, and my grandmother sewed the memory that went in it. You know anything about the Altair? It had core memory, which were little donuts, little tiny donuts. You could just about get a small pencil lead between those donuts, and you had to weave them all. She was a great seamstress and a sewer. Loved to always be knitting Afghans for me. In fact, I've got one in on my bed that she did. But she sewed a whole bunch of memory for me, and then started making huge money at 85 by sewing memory. Well, maybe she was 80 at the time. She made a huge amount of money sewing memory for my friends and other people in the computer club I was in. So it was always interesting. No screen, no switchboard. Well, I could make a radio sing Daisy. But yeah, I eventually got some other stuff in there and played other games. Anyway, that's kind of it. Now, what's the big news out here that you need to be watching out for? Where is that at? I think that's it right there. Let's go ahead and put this up. What is the contagion effect of Facebook? And there is a site out here. It's called etfdb.com. If you want to look at it, you can go in there and you can put in a stock and see what indexes those stocks are at and what the weighting is on that particular stock. When we come back, I'll pull up a couple of these, but the XLC, the communication service sector, it's not an ETF. 20% of it was Facebook. Vox is another one. It's got 13% was Facebook. Global Social Media Index, 12%. SOCL was 12%. First Dow Trust Internet Index is 9%. So there's a huge side effect. The XLK's got 7.5% being Facebook. So I'm going to tell you this, probably a lot of people went into Facebook earnings, and my guess is that these guys probably had margin on some of these things. Don't expect this to move in 3 days. And because this is such a large part of so many ETFs, I'm not expecting the ETFs to get anywhere to the close of outperformance, either long or short, what the underlying individual stocks will do. Anyway, we'll be back in a minute.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Anyway, we're going to look at the XLC here, which is the first one. You can just look at the gap down. I think that kind of says it all, doesn't it? 52, almost 52 yesterday when it closed, 49.70. And talk about an index with all of your eggs in one basket. That certainly was Facebook and this XLC. And of course, a ton of them, the other ones. So this is going to be, there's a book, you can find it on Amazon. It's called Iceberg Risk. And I'm going to say it's 2005, and talked about how markets are not hedged because everybody's hedging. If markets hedgings only work when when most people don't hedge. Let me put it that way. When everybody hedges, you're really in the same soup that you began with, and there's nothing you can do about it. So a lot of people think, well, I can hedge all my positions. You certainly can. But that blew up in everybody's face, both in 2000, 2001, and in 2008. So hedging into major pullbacks more than 10% seems to be counterintuitively not working. And of course, I think the name of the book's called Iceberg Risk, and it goes through mathematically how that works. But the idea is that as far as risk in the markets, you only see the top poking out like an iceberg. The 90% below the waterline is what you don't see. And I think that's what you see in some of these ETFs today. So can the S&P go higher? Yeah, it's Facebook's one of 500. Because in the NASDAQ, go higher, much more problematic. So I would say that if you're looking for big movers out here, probably going to be individual stocks. Facebook, like I said, I have a feeling a lot of people were long that on margin, and they're going to have about 3 days to get out. And the insiders probably know who those people are, and they're not going to let that stock up for 3 days. So we've got day one, we got day two, day three is on Monday. Tuesday, maybe Facebook starts getting a little bit of a bounce, and I'm sure a lot of people will want to sell into it. But just know that, as we get into fund buying next week, it's going to be very tough to push this market down. You need to everybody agree tomorrow in the action that the market's over at its top. If not, I think you got another week to go. So I'm looking at some of the most heavily shorted stocks here because I think there will be a biblical squeeze in some of these. And we'll just look at them. But all these stocks have at least 10 days to cover on them. And I'm going to be looking at these during the rest of the show and at least for possible positions tomorrow. Essentia Retail Group, ASNA. And everybody knows what 10 days to cover is, right? And whatever the average volume is for the last 30 days, it would take 10 times just to get rid of the short positions on that. In fact, the Wall Street Journal came out with those new numbers just last night. So very apropos. Give me a call, 877-927-6648. Email me at path@tfnn.com. And, of course, you can always put a message in the den. CBL. Do we have somebody on the line? Oh, we do. We got Sam from Melbourne. How you doing, Sam?
I'm doing pretty good. How are you, Dave?
Pretty good. It doesn't sound like you're an Aussie. So Melbourne, Florida?
Yes.
Okay.
Melbourne, Florida.
Sure. Okay.
Dave, this is the first time I call your show. I've been watching you. Keep an eye on you. See to hear what you have to say. I am a disciple of Tom O'Brien from way back. Okay. And the two stocks I would like to have you take a look at is Starbucks and Twitter. That have
What's the other one
coming out?
What's the other one?
Twitter.
What's the symbol?
TWTR.
Oh, Twitter. Okay. I don't have a great connection here. So, okay. Let's look at Starbucks. Are you long this already?
No, I have a put on it.
Okay.
And
when's your put?
My put was 50.
No, when?
I think it's for the 17th of August.
Okay. So you've got a little bit of a time. Here's where I would have put the put on, and that would have been back at 55. You want to see your odds are just so much better if it'll come back up there on light volume and at least try to fill whatever gap there is. And I would not be surprised that it goes up there, but you'll know tomorrow. If the GDP numbers are good, the indexes are higher, you don't probably want to hold that put through the end of the day. You know what I'm saying?
Yeah, the problem is, I think that put come out with earnings tonight.
Oh,
after the close.
Starbucks does have earnings?
Yeah.
I didn't see it on there. Okay.
I'm in trouble, huh?
I'm just telling you, no, I'm not saying you're in trouble. I'm saying, to me, this would be more of a flip of a coin. You can be right or wrong, and depending on what price you got the put, you certainly could make money. What I'm saying, though, is for me, when you have a big gap down, 90% of the time you fill this gap. And I'm going to say if the earnings are good, this thing hits 55 tonight, if the earnings are out tonight. I don't look. So that's your upside. Your downside, if this thing fails, is back to 47.37. What puts do you have?
50.
Okay. So
yeah, I had this position for maybe a week.
Yeah.
A week, 10 days now. Yeah.
I mean, are you in the money on this thing?
No, I'm a little in the red. I'm just a little bit in the red.
Okay. I'll wait. I want to hear your opinion on it. What do you think is going to happen?
Well, the thing is, okay, here's my story. I had a put on Facebook, right? Mm-hmm. And it took my stop yesterday. Okay, so that's my story. Okay, it took out my stop yesterday. And I did not reestablish that put.
Yep.
Okay. I let it go because the action of what happened to me yesterday was pretty bad.
Yeah. Why you didn't make money?
Right.
You were early.
I lost on Facebook. Yeah, I lost money on Facebook.
But what I'm going to say is that even you didn't make money on it, you were fishing in the right pond, and that's better than just being horribly wrong. Which means that I know when I get a few losers in a row that maybe there's something wrong with what I'm looking at, and I need to change my mind. I do like the fact that you went into the right one, even if it didn't pay off. There's I don't know if you ever watch World Poker tournaments or any of that.
Yes, I do.
You want to hang on through the break, because I think there's some psychology in here that's fairly good. I'd like to talk about today, and then we'll look at the other one, which is Twitter.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we got Sam on from Melbourne, Florida, not Australia.
Yes.
I think of Melbourne because I've been there a bunch of times in Australia, and I always think I'm going to hear an Aussie talk back to me every time I hear Melbourne. Okay, one of the things, I'm not a professional gambler. I've played in a couple of tournaments. I'm not young anymore, so I can't go up against these whippersnappers. But playing poker can tell you a lot. And one of the things I learned from some of the guys playing on TV to almost a fault, they'll say that, I did the right thing. You'd never know what's going to come out of the cards, but I played the odds and I did the right thing. So even though I played the hand correctly and I lost, I went out and celebrated and had a dinner because I did the right thing. Even if the results didn't come out the way I want to. If you can say that tomorrow on Starbucks, then I think you want to stay in the trade. Now, if you can't say that you did everything right, then you probably can just, you probably have a fairly decent amount of premium in this for the earnings. So you're probably not too far out of the money, right?
Yeah, not bad at all. It's just a hand.
So to me, I couldn't say one way or the other. I'd love this trade if it was printing at 55 today and you got half that gap filled, because I'm going to say more than 70% of the time, that's what it's going to do before it goes back down. And, so to me, I'd say that there's a 50-50 chance of each side. I don't like flipping quarters, but, market's kind of in a foul mood and Starbucks has been doing poorly. So it's, I would just say on a normal day, I'd say 70-30, 70% chance it goes back to 55. But with the market being a little freaky early morning tomorrow before you get into it, yeah, I think you could. I would say this, if you do hold it, buy the other side of it if it moves extremely, to the to the side that you win on, and box in your profits and just cash out both sides tomorrow. So you know what I'm talking about? Just go ahead and box in. If you got a one put on this, then buy 100 shares on the other side of it. And, if you and box in your profit, because my guess is that even if you're right on this, there's a lot of big names in this. and they're going to send their minions out starting about 8 o'clock tomorrow morning on CNBC to start talking the stock up. So there's a lot going on in this one. Now on Twitter, do you have a position in this?
Yes, I also had a put on it.
Okay. Here is where I would, again, it's not that I'm saying that you're wrong. I'm just saying I would do things differently. But when I see two gaps, like I see in Twitter, I'm saying about 80% of the time I see a third gap up. To me, where I'd want to be shorting this thing is tomorrow morning if this thing gaps up and there isn't much volume in it. I think that you might just see a lot of people shorting this thing all day today because, of course, they're assuming that Twitter is Facebook. And if they don't
exactly.
And if they don't think something's horrible on this, if they're on the wrong side, you can get a $4 or $5 gap higher. My guess is that gap wouldn't hold in where I would want to short. But you've got that gap at 38. You got the gap at 42. The 3-gap play. Do you have my white paper on the 3-gap play?
I understand about the 3-gap play. Yes, I understand that.
Okay. Well, if you want or anybody else doesn't know, you can email me at path@tfnn.com, and I'll send you my white paper on 3-gap plays. But this one's kind of nice. You get another nice gap about like this one here at $38 and close to at least the 42 out here. That's generally when you want to pull the trigger on this thing. And it may take 3 days for it to roll over because I imagine a lot of people are going to fight either way. And you're going into fund buying next week. So this may take a little way to get going. You have a nice gap in this thing. I think that's where I would want to be shorting on it. But you get two gaps, 80% of the time you get a third gap higher.
Yeah, I short. I had to put at 45 on it. So
okay, so you're kind of good on this, but again, certainly you're doing the right thing by not being in the equity. You've limited your risk. To me though, going into earnings, I've got to feel like I have some kind of edge, and I held one stock through earnings, through this earnings seasons already, and I was pretty sure. I was extremely sure that I was on the right side of it. I don't know how you can tell in Twitter. Let me put it that way. So to me, a lot of these are coin flips, and coin flips are not bad with options because you've limited your risk. But those would be the ways I would have looked at it. I would have waited for this to gap higher and then pull a potential 3-gap play to the upside on it and short that probably like Wednesday of next week or something. If it gets up there and there's no volume. And again, the market's kind of in a nasty mood. If things change in the morning, then that's it. But that's the problem with these plays out here. You could be right for a very short amount of time. Were you planning on taking your money if you did hit these correctly tomorrow?
Yeah, but see, Twitter earning coming out tomorrow after the close. So
no, Twitter's coming out before the open.
Oh, before the open? Yeah, if I can, I can close up the profit right now. And
well,
like I said, call it a day.
In my opinion, is a coin flip. So I don't play coin flips. I want to have a fairly decent idea that I know something like 70% I'm going to be right. Maybe you have that. I don't know. Maybe you know something I don't. So.
Oh no, sir! I follow. I've been watching you. I've been following you, and a lot of time I should have heed your advice.
Yeah, that's the only thing I can say is I don't have a good feeling for it, and normally that's a coin flip to me. I go to look and see where I've got a much better look at it, and I see two gaps, and I know how many times I've been gouged on those, so I stay away from them. Same way that I wait for stocks to fill those gaps at least halfway, and then I start making a decision of whether I wanted to short it then. Because generally,
what happened is, do you think we are going to have a follow through tomorrow on the Nasdaq?
I think we're going to have
because I'm pretty heavy on the on with the put on the Q2. So
there are a ton of stocks with people massively short. In fact, I'm looking at one here today that was 48 days to cover. 48 days on the short side, and it's not a bad stock. I'm thinking about buying it. I mean, you've got to look at how. I mean, if the stock's not going out of business, there's something very wrong with somebody who's got 48 days to cover on a stock. So I'm hoping for that.
Yep.
But I'll talk more about that one.
Okay.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
We're talking with Sam from Melbourne, Florida. And did you have any other questions? I guess he's not there. Okay. We'll find out. Anyway, I think we answered all those questions. I don't think much more. Again, you can always email me at path@tfnn.com. I'll be glad to send you this 3-gap play. I've got a handful of people that already emailed me on it, so I'll send them out in an hour. But it's just making sure that there isn't a trap door in the market. And like I said on Twitter, my guess is that, at least on this one, I got a fairly good handle on the psychology of traders. And a lot of people are going to, when something like Facebook happens, they're pretty good at using an extremely wide brush to paint on all the stocks the sins of one. And I don't know that the sins of Facebook transport instantly into Twitter. I do think that a lot of people are going to be extremely nervous. But the downside is going right into earnings. I've got a stock today that's seen some fairly nice moves. And that started with them shorting it last night and shorting it this morning and shorting it again. By the end of the day, my guess is this stock's going to open up or go to after hour highs last night where they were shorting it. And these guys are going to get squeezed out by the end of the day. Again, I don't see the case other than light volume for a market that's ready to blow out yet. I would say that your odds are 10 times better a week from tomorrow than they are tomorrow for seeing some kind of huge move down, and that's just fun buying. There are only a couple things that tax extremely well. That's expiration and fun buying. In the meantime, sell when you can, not when you have to. And we will see you here tomorrow. Same bat time, same bat channel.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.